Welcome back to API Days India. We had some couple of great keynotes on open finance and really painted the picture for how open finance is unfolding in India. In this track, we're going to focus on some of the business models and use cases for open finance, starting with lending and buy now, pay later. So I'm very pleased to welcome Aishwarya Jaishankar. She's the co-founder of Hyperface Technologies. Welcome, Aishwarya.
Thank you, John. Very pleased to be here.
Great. So lending hasn't been a big feature in the Indian market previously, but the buy now, pay later model has really been booming. So you're going to share how this has sort of evolved and where what direction it is going to take.
Absolutely.
Okay,
Hi,
over to you.
everybody. Thanks, John. Hi, everybody. I'm Aishwarya Jaishankar. I am co founder of Hyperface Technologies, a credit stack which is focused on powering pay later and credit card programs. I'll today talk to all of you about, as John said, the proliferation of pay later and how the whole API economy has made it a reality today for any brand to be able to offer a pay later program to their customers. Before we get into the technology aspect, what's really happening today in the market? This is what checking out in an Indian app store today, Indian app, e-com, travel, you name it, fashion, wherever you go check out, there is the pay later staring at you, right from travel pay later to pay later over wallets to pay later over e-com checkout, which is branded by the e-com player itself. There are multiple forms of pay later, and this is not very different, interestingly, even in the offline world. Be it your electronic store, be it your ubiquitous QR codes, pay later today is everywhere. Now, interestingly, we spoke about the context in India, right? In India, you would be surprised to know if I tell you that pay later is not new to India. Bajaj Finserv is one of the oldest NBFCs serving the country, and they have been offering pay later in the form of installment loans for your electronics, for your higher ticket purchases for a long time now. So they have built a network of merchants with whom they tie up with, and the customer can provide the KYC, etc. Now, what is emerging interestingly is while this offline pay later always existed, what we are seeing of late is a proliferation of digital led pay later platforms, not very different from an Afterpay or Klarna. We have our own Zest Money, which is a discovery led and merchant partnership led platform. We have players like Slice Pay and Uni offering card as a form factor. Bajaj Finserv themselves today have moved into an EMI card where the customer can just use it at their convenience. And as I said before, we also have brands offering their own pay laters, like the largest e-com players in India today offer their own branded pay later. They have tied up with a lending partner. Apart from that, the payment aggregators like PayU offers a lazy pay as well, which is again a checkout option for pay later. So there are multiple factors and multiple variations of pay later that exist today, that the joke is even a credit card or a loan today might just be called a pay later, right? That is the term the younger generation seems to understand. What is aiding the growth of pay later? Of course, the whole demographic dividend that of India, where the population is much younger, right? And younger population believes in instant consumption and they want things now. The second big factor when it comes to India is we have a huge amount of digitally savvy customers, some of the cheapest smartphone data rates, and we have a very high e-com penetration, which I'll come to in a moment. And of course, our digital payment penetration has been very high. India today stands at the top two or three countries in terms of ubiquitous of digital payments. Our own UPI has crossed 2 billion transactions. And the last part that is aiding pay later growth is the ability or the ease to do digital KYC. You know, the Aadhaar stack has actually enabled real time KYC of customers much easier. So all these factors are today contributing to what you could say the digital credit story. But before we jump into that, the very important thing to remember in India is institutionally, India or culturally, India has not been a very borrowing country. The household savings rates have always been the highest, right? We've had just 72 million credit cards versus 900 plus million debit cards. And typical traditional lenders have been a little hesitant, I would say, to jump into the pay later bandwagon. If you look at the statistics, this is data from Sierra Mark, one of the bureaus in the country. While retail loan has been growing at a rate of 47%, this includes your small ticket personal loans, consumer loans, and what we call typically as pay later falls into these categories. Very interestingly, 81% of small ticket personal loans and 76% of consumer durable loans are coming from non banking financial players. Like I told before, India today has 100 to 110 million customers. This is 2019 Statista data using e-commerce. This number is growing. And again, couple of years back, or rather in last year, 3% was the penetration of e-com. But today it is pay later on e-com. It is expected to go up to 14%. Now, what is really making all of this possible? One pattern that is very clear is the non-banking lenders who have been open and looking at innovation and seeing what else or what more they could do. The whole ecosystem moving digital has been very useful. In the last 4 5 years, what we saw was a plethora of digital lending apps which were non-use case related, non-checkout, just loan distribution. But today those setups are moving into end case, use case controlled, end use controlled pay later programs as well. But a lot of fundamental tenets that came in during this digital lending boom are today helping the pay later programs to proliferate. In a typical traditional lending life cycle, these are the components that exist, right? You need to underwrite the customer, basically measure their ability to repay, their intent. The KYC and ID verification, which is again a regulatory requirement, typically you need to know who you are lending to. There are AML safeguards, etc., that the regulator has put in place. The disbursement of the loan, the end-to-end program management of the lending. If it is a are you billing them, are you giving them collections mechanism? Collections again is soft collections and hard collections, the various mechanisms or the options that the customer has to repay the loan. And lastly, managing the book. While it could be risk profiling of customers, it could be risk ascertainment at the time of underwriting or through the life cycle of the loan. These are typically the models, and in a traditional lending cycle, a whole lot of these were paper based. Even today, you have banks calling you when there has been a abnormality observed in your credit card payment where you paid a higher ticket loan. You get a bank collection team or a risk person calling you and confirming if it is you. In terms of KYC and IDV, yes, we have evolved to digital and the pandemic has helped a lot in acceleration. But underwriting, we still have traditional institutional lenders going for paper based underwriting, etc., which is a space that the non-banking financial companies have been able to see opportunity on. I'll just walk you through the innovations that are happening here, which have a good impact on pay later. On underwriting, what has evolved is the ability to agree, accept, and underwrite the customer on the basis of alternate data. Let me give a small example. The fact that you're spending so much in your e-com app tells your ecom about your potential, and which is what they are sharing with the lender, saying, hey, this is my high value customers who spend say USD 200 a month, 300 a month. What is it that we can do for them? The second part, you have a smartphone. Even your device tells people how affluent you are. The locations where you are living in, where you are moving around, can tell people about a little bit more about your demographic profile. So there are a whole lot of alternate data points that are emerging thanks to the proliferation of digital apps, thanks to the proliferation of smartphones. And second is ability to put together this data and arrive at a semblance in terms of who this customer is. Those capabilities are increasing, and I'll talk in a little bit about players who have been able to support those kind of data and those kind of underwriting models. In terms of KYC and IDV, the biggest innovation that has happened, which is institutionalized, is our Aadhaar stack, where a real-time KYC and IDV is today possible in India. And apart from that, the regulator has been very friendly in terms of even during the pandemic, India has an official video KYC policy in place. We are national beat pan data or NSDL. We have APIs in place to do a digital real-time verification of the customers. In terms of disbursement, right? Like I said, when you're going to give a pay later on a e-com checkout, the use case is controlled in itself. The typical lending safeguards that you worry about are taken care of. Second is the controls that you can put. There are pay later cards emerging. For instance, if you want to pay a medical bill, right, the MCC control cards play a big role in helping you pay your medical bill, and it's literally getting loan in a sachet. I spoke about EMI cards. EMI cards again are restricted to consumer durable MCCs. Most importantly, even in prepaid, we have models where there is just in time funding, which becomes a credit line card a reality. It makes a possibility for the customer to get a on tap credit line card from a lender. And on the side, in terms of collections, what we have is a whole lot of new options. We had UPI collect as a feature being introduced. So in UPI today, it is possible to keep a recurring collection or a mandate going on with the customer. We have a ENAT system in place. And lastly, in all this data is also helping in risk management, risk profiling, transactional risk authorization, etc. of the customer. So all these innovations are helping the pay later ecosystem mature. Today, it is so much that a brand can just tie up with a lender, look at a credit card as a credit stack as a service. They can look after risk management as a service. They can take a KYC API as a service. And there are players who even offer collections as a service. So, as you can see, the whole adage of embedded finance on any brand becoming a lender is more true than ever because of the ecosystem evolution across the board, across these services. Coming back to the API economy, right? What are the different APIs that are making these pay later programs a reality? We spoke about underwriting. We spoke about bureau. Today, I mean, there was a time that if you did a bureau dedupe or a score, it would take about a day. Second, there was no bureau track for a whole lot of Indian customers. You know, your bureau hit rate would be about 40-50%. Today, this is moved up to about 80%, and we even have new to credit customers getting a score because of all the digital tracks that we spoke about. For instance, you might have not taken a loan, but you might have taken a postpaid card, and your repayment there could help a bureau profile you. We even have firms which are saying, how can I make meaningful semblance of the data? For instance, there is a company which does a pin code based plotting of affluence. India has over 60,000 pin codes, and a pin code could tell a big story of who the customer is, what kind of demographic profile they come from. And today, more than ever, all this data is accessible. All this data is available as an API for a lender to say, hey, how do I better know this customer without asking them to send me their last 3 months pay slips? And that is where these kind of be it a bureau score, which tells about your repayment intent, or all this data, alternate data, which tells about your ability is useful. In terms of KYC APIs, ID verification, bank account verification. Do you have a bank account today? Is super simple. It's a single API to verify with a bank with your details. We have players who offer DigiLocker where you can store your information in case you are not very happy doing it over an API and real time. So there are various mechanisms today available over APIs, and we have vendors having a big part in KYC and ID verification. We also have address verification APIs. We also have players who offer on the business side verification from GST and multiple sources about the customer, the store, whatnot. So we have a very rich set of APIs available on identity. And then we come to the program management and disbursement, where, like I said, it is not just enough to give the customer a credit line. You need to handle them through the life cycle. You need to send them a monthly statement. It could be a credit line which is disbursed over a period of time. It could be a credit line disbursed over a form factor. So you need a program manager who handles this end to end. At Hyperface, this is what we do. Once a credit line is issued to the customer, the Hyperface stack remembers the customer. We create a billing, a statement. You could set a frequency of 7 days repayment, 15 days repayment, charging a certain interest, certain fee. This whole programmatic management is taken care of players like a Hyperface. You also have players who are integrated with merchants who offer you an EMI conversion and they tie up with your banks. So people like Pine Labs and Flex Money have been successful in creating a existing to bank customers getting an EMI through their own bank. That is another way your disbursement can happen, because your bank account is the most safest way for you to park your money, and these players ensure that merchants are directly tied with your bank to be able to provide you a lending line. In terms of collections itself, gone are the days where someone was sent home to do a check collection or us giving a postpaid check, right? Today, a whole lot of pay later programs are happening through setting up a ENACH, automated national automated clearing house, an ENACH, or imagine setting up a UPI collect request for the smaller ticket sizes. Those are the mechanisms in which soft collections are happening today. It has eliminated two things. One, the time taken in the clearing cycle. Two, it has eliminated the whole friction in the whole collection process. Lastly, coming to hard collection, right? When the customer defaults or when the customer goes a few days beyond due, we have players who do voice AI services, we have telecalling APIs, we have end to end automated AI based API players to whom you can just transfer the data and give them a update of where in the collection flow they are. Are they at a 6 DPD, 30 DPD, and accordingly they intensify the collection efforts. While physical hard collection does exist, the actual need to get there has been minimized with a plethora of APIs in this space. And lastly, we come to risk management. When it comes to giving out a credit line, two kind of risk managements matter. One is at the time of me authorizing the transaction, I need to know it is you. It could be fingerprinting, it could be device mapping, it could be matching you with two, three of these variables. We have players today globally. We had a threat metrics today in India. We have players who does even a keyboard pattern recognition could tell them, is it Aishwarya who's taking this loan? The second important part is the profiling of the customer. Has this customer ever been a fraud, or have they defaulted across the board? Those kind of questions might also need to be answered as you manage the portfolio, manage the customer life cycle. That is also where these APIs are coming handy. So, as I said earlier, this whole plethora of APIs are today orchestrating a pay later program. And for a brand to create a pay later program is literally becoming setting up a few Lego blocks and getting started. Now, while it is all looking hunky dory, what are the challenges here, really, right? Like any growing what should I say, financial product, the biggest thing is what are the regulatory safeguards we have on this product? Because at the end of the day, a lending line is something the customer gets, and the lender is responsible throughout the life cycle for on an on-demand basis. So how is the bureau reporting going to happen today? Surprisingly, the bureau reporting model either assumes you've got a credit card or you've got a term loan with a fixed repayment schedule. There are ways and means in which people are retrofitting the pay later program reporting into this, but ideally pay later should be a standalone line in which you do the bureau reporting, and there is some regulatory changes hopefully that will come in soon to streamline this. Globally also we have seen that it is better to have these tighter regulation in place, otherwise pay later can totally boom out. The second part, as I said, is how the lender is going to manage the balance sheet, the reporting, etc., which ties back to very closely to bureau. In a 15-day line, does 90 DPD become an NPA? Is a question that regulator needs to sort of define. On a smaller ticket size, right, what becomes a write off value if I've given a 1,000 rupee loan? Again, those are things which today are not defined, and we are hoping that there will be more clarity that will come in. The second part is who owns the customer, right? One is we can say that there are a set of APIs orchestrating this program, but it can't be that customer is getting tossed between multiple players. So very clearly it is the brand's responsibility to retain the customer ownership and ensure there are data safeguards put in place to protect the customer's sensitive information, etc. The other part is in terms of consumer protection. How is customer servicing going to happen? What if it was a fraud transaction, etc., etc.? What are the safeguards in terms of pricing? How do you avoid customers getting into a debt trap? Can we say that the customers can't have more than N or more than X credit line? Those kind of things again go back to regulator. We are hoping there will be more guidelines that will emerge soon there. From a business point of view, right, managing the unit economics of a product like this is the tightrope, because the typical ticket size in India, even for a UPI transaction, is 600 rupees, which is barely 10 USD. And for a credit card transaction, it is about 3,000, which would again be about 40 USD. So it is not a lot of money on the table, especially when you think that there are multiple players involved, which is where scale matters. And at scale, some of these economics will need to start making sense. The second macroeconomic scenario that's playing out is that today the pay later program has been on a lower interest regime. We are seeing interest rates tightening with raise in inflation, etc., etc. Now, when there is a margin compression, when the money in which you lend out and the money, the cost of funds is actually narrow, then how many people can sit and be fed on the table will become a question. So that could become a challenge as pay later program scales up. Lastly, the card collection costs. While we say there are 60,000 pin codes in India, that is also the nightmare, right? When I need to go meet the customer and collect, you can't. I mean, we have had instances where customer hasn't been treated well, etc. So those kind of things also have to be looked after when you're outsourcing collection. That could be risky as well. And from a brand point of view, those are not the things that you want to face, right? I mean, you're here trying to give a customer convenience. So these are the, I would say, the various challenges. But of course, the picture looks rosy. We are expected to have billions of dollars in pay later books soon. So I'm sure with all these APIs powering them, we will have a fantastic pay later book in India, and we'll get it streamlined by regulators soon. Thanks a lot.
Thanks very much, Aishwarya, for painting that picture. I guess there are a number of things there that I'm really intrigue me. Simply the number of players who offer different components of this as a service, risk management as a service, collections as a service, various other. So it I guess it makes it possible to start new pay later businesses or to add on a pay later feature to an existing business by accessing those sorts of bureaus. What sort of coverage across India do those firms achieve? Is that nationwide, or is it very localized?
No, that's interesting, John. I think in all this, the background of it is also the starting of boom and what has
Yeah,
been happening in terms of a whole lot
yeah.
of new age startups coming in. I would say that in terms of your top few programs, like let's take the example of Bajaj Finserv, which must be today sitting with the lion's share. They have all this in house, right? They've built this for over
Mhm.
30 years now. Now, the
Yeah.
new age players that are emerging, over time it is possible that they build this in-house. Only for the brands today, especially the e-commerce brands, which are seeing that there is a consumer demand, for them this becomes non-core. Why would, if you were an Amazon, why would you want to invest money on a collection as a service and so on? So
Mhm.
I would say that all these as a service operators are today operating on a network effect. Their hope is that they get more, but it would still be predominantly tier A and tier B based for now. For it to proliferate into the larger, or rather the smaller towns and largely lower digital access households, etc., it is still some
Mhm.
time away, is how I would put it, John, in terms of
Right.
distribution.
Uh-huh. Okay. So you did spend some time talking about the regulatory aspects. One aspect of that I wondered is the use of alternative data for credit risk rating. Um, can I understand it perfectly, given the difficulty in obtaining credit history by traditional means. What's the regulators' view on the use of that? Because the organisations that use that alternative data, um, sure, they're making business decisions about whether they think a customer is creditworthy. But if they do it at such a large scale, then there's an old saying: if you owe the bank $1 million, you've got a problem. But if you owe the bank $100 million, the bank's got a problem. And
Yeah.
if a mistake is made in credit risk rating at a large scale, um, then the whole then that firm that's making that decision is at risk. And we've seen in the global financial crisis that was triggered by misrating of subprime mortgages in the US, that it becomes a systemic problem. So what do you see the regulators' view of this alternative risk rating
This is
data?
very interesting that you touched upon, John, because just last year, what we noticed is that the regulator has come up with a digital lending paper where they've clearly said if you're not licensed to be lender, what we saw as a pattern was there were lending service providers who took
Mm,
just the lender license as a service. They said, I'll underwrite the customer. I know all these variables. The regulator has now come in and put a wrap on that saying the underwriting or approval of a particular customer should always be done by the authorized RBI approved lender. You cannot have a model where somebody says, I'll do this. What the lender needs to do is, of course, there could be data that makes sense. How do you use it? It is going to be the lender's credit and underwriting call to approve that particular customer using that data versus a third party lending service provider saying, I know this customer, I'll approve them. That is a big
mm,
shift that has happened, and we are expecting
mhm,
more regulations around that. For instance, how capturing an SMS data and making it valid today while it is happening, what is does the regulator really approve? That is something that we are awaiting, but there is some good progress also that has happened. We are seeing that a lot of new players are not hesitant to go become or take the lending license themselves. For instance,
mhm,
uni is a non-banking financial corporation. They've taken the lender. We are also seeing all these digital lenders forming an association, Digital Lenders Association of India, which is saying we will lend responsibly. So that is the
mhm,
ecosystem evolution. So we'll hope
mhm,
that the twain shall merge, where the regulator is being able to
mhm,
appreciate these safeguards and being able to guide rightly. But what I guess cannot not happen is the ability to absorb the data, because for the customer
mhm,
also we have an open finance paradigm coming up, which is sahamati, right? And we
mhm,
also have on the business side the whole cash flow data. Everything is becoming far more accessible. So on the
mhm,
personal side, what is meaningful data might take a little trial and error to get there, but to get there we should. I mean, it could be that
mhm,
tomorrow in sahamati your postpaid data come in as well. A whole lot of service provider data can come in. So I guess
mhm,
organized, what do you call, digestion or ingestion of this data is still
mhm.
some time away. But the
Yeah.
safeguard and regulations are being put in place. That's how I would put it, John.
Mm. Great. Well, thanks very much for sharing those insights. I really appreciate it. Thanks, Australia.